Give it a second here.
Purpose. No one can create your purpose for you. No one can tell you who to be. So in purpose, you have to create your own purpose. And in evolution, you have to evolve towards that purpose. It's easier to live when you have goals to meet. You understand? If you have goals to meet, then you don't feel so voided, and you understand why every day you're looking at this person in the mirror, because that is the cool part about the game. You get to be anybody you want to be.
All right, welcome. This week, David, you made it on. This is
right on time.
Just in the nick of time. All right, so let's go and get started. We got a very special guest this afternoon. I'm gonna let him introduce himself first, and then we're gonna follow up with that. I have my guy Ian. Is actually David's one of David's partners, referral partners. So,
yes,
Ian, why don't you go ahead and introduce yourself and give us like a little quick quick bio, 30-second, 90-second bio.
Yes, sir. Ian Karanja. I own Onyx Insurance Brokers. So we do home, auto, and business insurance. So we work with over 30 different insurance carriers. We represent the client, not the company. So yeah, our mottos, we do the shopping so you don't have to. So yeah, thank you for having me on, and yeah, excited to talk.
Gotcha. How long you been in the insurance business?
12 years now. I've owned my own agency for 6. So just reached my 6th year last month, and yeah, just dialed in, and thankfully able to help the community. And yeah, man, I'm past failure now. I'm past that 5-year failure mark.
Now it's time to rock and roll.
Now it's time to rock and roll.
Gotcha. So we're gonna go ahead and get everything started. We're gonna go ahead and introduce ourselves and go ahead and get the party started here. Again, first reaction. I know you hadn't seen the clips, so first reaction to the clips. What we're gonna do is we're gonna watch some clips that has relation to our business or businesses or just a topic we want to discuss, and then we're gonna go in and we're gonna round robin it, and then if you got any rebuttals or anything like that, or anything you want to interject, feel free to interject. But let's go ahead and run it. My name is Brandon B. Dixon. My MLS is 1541210. It's at Billionaire Loan Officer on all social media. Also, my website, if you want to book me for a consultation or you want to apply for a mortgage, go to www.applywithb.com. Also, you can call me 24/7, 832-775-8357. I'm available 24/7. So again, I said at Billionaire Loan Officer on all social media. Please like, subscribe. Also, please ask us any question. We'll read it live here and we'll answer it, and we'll do our best to answer it right here live on the air as well. Couple more things, www.brandonbdixon.com if you want to book me for leasing or listing. Don't forget I'm a licensed realtor as well. Last but not least, we love Frenchies.com. That is my other business. I breed exotic Frenchies and have working on my own bloodline. So that's kind of my passion project. So we love Frenchies.com is up and running. David, you want to go for it next? And
sounds good. So my name is David Youngs, NMLS number, license number 328679. Keep going. That is my YouTube handle right there. Infinite Home Team is my team name. That is my website, infinitehometeam.com. A ton of resources on there that you can go find. Calculators, access to resources, if you're a realtor, etc. One more thing, .cards/David Youngs. If you want to save my contact information, go to this one website, click download, save to your phone. You'll have everything you need of every possible link you'd ever want in one place.
Gotcha. Dunbar.
Yes, Brandon Dunbar here. To Google me to find me rather, and all my contact information, you can just Google my name and realtor. You can see all my reviews. You can get my contact information, and you can go to the next one to book a consultation. Just reach out to me and put on my calendar via my website at dunbardiddy.com. Anything from landlords to first-time home buyers to seasoned investors. I can help you out in this market, regardless of what level you are on currently. One more.
I think that's it. That's all you had, right?
All right. Well, that's all I need.
You had the 2 banners. That was it.
That's it.
That is it. But let me remind you, don't forget to like, subscribe the video. Actually, that's the wrong one. Where is my like and subscribe button here? Moved it around. Here we go. But yeah, go ahead, like and subscribe. Boom. And we will read the actual comments live here on the air. Without further ado, let's go for the first clip here. And I got a hodgepodge of different clips here today. So it'll be a different, kind of different a little bit. I got a mixture of insurance, and I got a mixture of like just the normal things that we do as well. So let's go ahead and run this first one here. All right, let's go ahead and run it. Can y'all see the screen?
Yeah, you still have my banner up, which is totally fine with me. But I think.
All right. So what about now? Can y'all see the screen better?
Yes, sir.
Perfect.
All right.
We got sound too.
93,000 homes per
Good
year,
deal.
more than almost every other home builder combined. This is how they became America's home building machine. D.R. Horton was founded with a $500,000 loan in 1978 by Donald R. Horton in Fort Worth, Texas, and today it's the largest home builder in the United States. In 2024 alone, they closed 93,311 homes, generating $33.8 billion in revenue. That means that roughly 1 out of every 7 new homes built in America now comes from D.R. Horton. Their advantage starts with land control. D.R. Horton controls over 540,000 lots across the U.S., enough land for more than 5 full years of construction at their current pace. But instead of buying all that land up front, they use long-term option contracts, which lets them lock in land prices years in advance without tying up massive amounts of capital. This allows them to scale faster and survive downturns better than smaller builders. Their next advantage is hyper-standardization. D.R. Horton doesn't design custom homes. They use repeatable floor plans, standardized materials, and national supplier contracts. This gives them lower construction costs, faster build times, and predictable margins. Most homes are actually built in under 90 days. Then comes geographic dominance. They focus heavily on Texas, Florida, Arizona, Georgia, North Carolina, and Tennessee, which are the fastest growing housing markets in America. These markets provide affordable land, business-friendly zoning, and endless population inflows. But their real secret weapon is cycle control. During housing crashes, when most builders retreat, D.R. Horton buys land aggressively. That's how they built their massive land bank after the 2000 financial crisis and the 2020 COVID shock. Then when demand returns, they flood the market with inventory. So it's not just home building, it's land banking plus supply chain engineering plus a capital strategy. So that's how one company builds 93,000 homes per year and becomes the biggest builder in America. D.R. Horton builds 93,000 homes per year, more than.
Bam. Ian, since you're our guest, you get first shot as reaction. So let us know if you want to pass or you want to get us to react first, or you want to go in on it.
No, I'll take it. No, I didn't know that they did the options contracts. That's a pretty smart move. I've definitely worked with a lot of first-time homebuyers who have gotten D.R. Horton built homes, and yeah, it's interesting their go-to-market strategy, and pretty inspiring. On the insurance side, they do have some relationships as well, which I've kind of ran into, and I'm not sure if I should talk about that later or now, but I definitely see kind of the pros and cons of working with like a large builder like D.R. Horton.
Gotcha. Dunbar, let's keep the. And then y'all want to try something new? Y'all want to just hop in, or y'all like the round robin?
I think the round robin's good in general, but hop in if you have something like, I gotta say something on this, like I got this thing.
I got you. So Dunbar is running.
Yeah.
What's your thought on these big builders?
Well, I mean, they have a pretty good strategy. I like the states that they are targeting. Those are pretty fast growing states with a lot of empty land, and you know how they always say buy the dip, and I like that they when the market is turning, they turn on their investor hat, and they buy land to hold for when the market stabilizes, which it always does. So that's my thoughts on that.
Right. I want to start it off like this. I like I'm not too crazy about big builders. I do have a bunch of this month actually closing, so I'm not cutting my nose to spite my face. However, I'm gonna be honest. I think big builders in Texas got too big, but I like the strategy as far as on the business side that they have, where they're planning for the future. They're planning 3 or 4 steps ahead. So I like the fact that they have a game strategy as a businessman, admiring another business. However, I know in my field, they're kind of our nemesis because of the tactics that they use. And people are familiar with the tactics, and I know probably some of my sales reps are watching me, but hey, I gotta call it like I said. Their nemesis is they're our nemesis as far as loan officers, because what they try to do is they try to get you to go with their lender and that they own. So and they do kind of almost these guerrilla tactics to try to get you to go with their lender. They we'll offer you this, and all they're doing is moving money around. So that part I don't like. I don't like that they try to manipulate the customer, especially with the bigger builders. I know D.R. Horton is like one of the biggest in our space. However, it is a good value sometimes. I think sometimes it's inflated. I do like them as a business, the way if you want to do it big. They own the actual title company. They own the lender. They buy the properties, the land way in advance, like they said. I mean, they doing it right as a business. However, me being a rival, you got to kind of push back a little bit. But I guess that's the whole thing, is if you're going to be the big fish, smother everybody else out. And I guess that's their tactic. So now I yield the floor from there.
Yeah. So, and keep in mind, before I got into the mortgage industry, I was in construction, and we did a lot of these kind of homes, including D.R. Horton homes. I personally have worked on, so I am familiar with the builder. Any new builder like this is going to usually, and I'm not knocking them, I'm going to just put a conglomerate here of all builders. They're in business to make profit, and unfortunately, because of the way that they design the structure of things, construction suffers. Your quality of home oftentimes is not as good as it could be in many of these situations, because they're trying to, as they showed, they're trying to plan for the future. They're trying to get these things ahead to curb any kind of losses. And then they've got the partnership, so they can kind of filter some of the money through different places. So like, as an example, use our mortgage lender and you'll get $15,000 off your costs. But if you don't use our lender, then good luck. We're not going to give that to you. It's funny because that's illegal for me to do, for a realtor to do, for a title company to do, for anybody to do in any space.
Except builders.
Because they have better union reps that got themselves better laws to ensure that they are in power to be able to do this kind of thing. And it's sad that it works that way, but it unfortunately still does. And because it hasn't become a big issue, there's so much regulation now in the industry overall that it hasn't come into play as being a big issue like it was that led up to the housing recession in 2008 that we had. They haven't rechecked this thing again. They haven't gone back and fixed this. I still think they should, personally. I think they should fix changing the model of not allowing builders to control or dictate that kind of thing. of saying you'll get a discount with us if you use this lender, but not this lender, or this title company, not this one, this realtor, not this one. I don't think that's legal, personally. But the way that they talked about this of like planning for future, and like there's a reason why they're number one is they're getting ahead of this curve of thinking ahead of the projects. They're looking at what will this look like in a few years, whether it's good or bad. They've got everything lined up and kind of pre-figured out. And by having these different vendor partners and controlling the entire thing, they can control the money better too, to save, spend, do whatever they need in a down up market. And by controlling the cost of materials as well, that also helps them to be able to save money as well. As an example, I used to do flooring installation with companies like them as a builder, and they will buy the basic bottom of the barrel flooring you can possibly get. They will hack that thing in as best they can to just call it done. And your upgrade cost means you get kind of normal-ish level quality. Like, it's really sad that that's how so many builders do it, which is why I want to point out I respect good builders, because there are quite a few good builders out there, though, that really do a good job with this, where they're doing something similar, but they take it and give it back to the client. They're actually doing a quality build. And because I think, honestly, I mean, if like as a homeowner, right? Like if anybody watching this is a homeowner, if you're going to buy a house, this is going to be your forever home, your dream home. You want it to be nice. So let's make it nice. You know, you don't have to fix everything as soon as you get into that new construction home. You want it to be nice and last you for 10, 20 years. So
a lot more than that, because the mortgage is going to be 30. So you might want to last a little bit longer than 10, 20 years. Question, Ian, since you're our guest, what do you feel about I forgot to mention as well. Don't forget that DHI owns his own insurance company as well.
It does. Yep.
Right, so how do you feel about them? I had 2 deals that cut my guy. I was going to ask John Flowers this, but he had to watch the kids at night. I was going to have my insurance agent on here as well. That would have been a good battle, but he's in Texas. But I was going to ask him this as well. How do you feel that DHI cut him out two deals last month? That is outrageously cheap.
Yep.
You know, so it's hard for the customer to get past that. And I kind of see like we kind of needed like the ratios. So I like, man, John's my guy, but hey, we need this cheap insurance right now. So sorry, John. You know, so I guess I see how some realtors feel like, all right, they got the cheaper rate. So sorry, B. I know you held them by the hand. You know,
what I try to do for my clients, because you know, I don't sell cheap insurance. I sell the best value, and I think D.R. Horton sells, in my opinion, cheaper insurance, in so much as they have an exclusive contract with 1, maybe 2 insurance carriers, right? And that insurance carrier will give them a deeper discount that I don't have access to. It might be the same insurance carrier I do have access to, but like they will just cut some sort of deal with them. And you know, the people who work at, you know, this is my opinion only.
That's the whole point of this show, by the way.
Right.
Okay.
Our opinions are our own.
Perfect. The agents are just employees of D.R. Horton. They're not like insurance professionals, right? So like, when I do see those quotes, because I ask for a copy of that, right? And I tell them, okay, yep, this is cheaper, but this is what you need to change on the policy that they gave you to make it so that it's effective during an actual claim, because they're missing out on the details. You know, the devil's in the details. It's all the exclusionary language of an insurance policy that a lot of these quotes that have come across my desk, I'm like, yes, it's cheap because they've been able to do ABC, but you're missing, you know, XYZ. So do that and keep that policy and come back to me, you know, when you actually need some good customer service. And so I'm okay with I understand it's a game for sure, and that they've cut really good deals with the entire vertical, which is great, but they're in my opinion not the consultative advisors that my agency is. But when you're worried about DTI issues and just worried about closing, like, you don't care about that probably, right? You're just like, hey, like,
most people think that, hey, it's a brand new house, what's going to happen?
What's going to happen? Exactly. And it's really weird because it's usually the brand new house or the really old house where something happens, right? So, and that's where I kind of help people understand, these are the things that can happen in your brand new house. And like, when it does happen, then they don't think about that DR Horton agent, because it was just a number that was just presented to them. They probably never even talked to the agent. They think about me like, oh my God, Ian was right. And so it's just a matter of time. And yeah, they have their place, and I definitely don't want to knock their business model, because that's how you scale. But I'm not someone you just it's like going to get insurance on your own. You pick your own limits. How much what's the value of your home that you think it is? Like, what's the value of your belongings, or how much liability coverage do you want? I have like minimums in my agency where I'm like, hey, like, I will not sell you anything under this amount, because I know if something does happen, that's when you'll figure it out. And I never want to tell someone like, I told you so. I'd rather.
So
that's the right way to do business. Can I add one other thing? Power of ownership here. Anybody watching this, if you're thinking of buying new construction, I just want to point out, if you ask the builder, will you honor that same incentive that you're giving on this, and the other with each of these different professional spaces? Will you honor it with my person? If you have a solid contract, a solid understanding, you have communication with them, they might do it. I have had this happen before where they'll say, you know what? We looked you up, David, you're okay. Like, we we'll give your client this same deal. Even though we have a partnership with this company, we'll honor and give you that $5,000 off closing costs for your mortgage, or whatever it is.
It's all negotiable.
Yes, it's all negotiable. Ask the builder if they're willing to honor that contract, because and there are some builders, like there's a recent builder I just met recently. I met one of the builder reps here that they're giving this to all professionals. They are not exclusive to anybody. They have some partnerships with preferred partners, but they're not saying you have to use them. They'll give it to anybody. So ask the question. You might get the same incentives that companies like DR Horton. Now, not necessarily everyone, and I'm not saying DR Horton will, but any of these bigger companies might honor that. So keep in mind, the whole reason why they do this, by the way, is not just to make money, but they want to make sure the deal closes. They know that they can control their own people. So if there's an unknown random that comes in and it's like, well, who's this mortgage person or this real estate person or this insurance person that we don't know? Well, there's a little more risk. There might be a risk to the timeline, the costs. So we want to make sure that it's controlled. So if they can have the extra assurance you're working with a good professional, somebody like Ian or myself or Brandon or other Brandon here, then they might honor the contract and still move forward with you with the same terms as they would have with their other place. So I've had this happen multiple times. Ask the question. It does not hurt to ask the question. Worst they can do is say no. And you decide now. Are you going to work with your person or go with theirs?
Yeah, we could spend a whole hour on this, but the pivot. There's an old cliche. They said you got to pick two of the three. It was cheap ain't good, and it's not fast. What's fast is not good, and it's not cheap. What's good is not fast and it's not cheap. So you got to pick. You're gonna have to sacrifice two of them. There's no such thing as fast, good, and cheap. It doesn't exist. So with that being said, let's go ahead. I do have an insurance one for you. So let's go ahead and dive into this one.
Nice.
Let's go and see if you agree or disagree. Can you see the screen?
Yes.
Worst homeowners insurance companies right now, according to claims denied and insurance costs. There is nothing worse than paying an arm and a leg for insurance, and when you actually need it, you get screwed over after making a claim. Number 4, Liberty Mutual. Liberty Mutual has high complaint rates and long wait times for claim resolutions. They're known to have some of the highest premiums, and in 2024, they increased rates by an average of 14.5%. Also in 2024, they denied almost 34% of all homeowners insurance claims. Number 3, State Farm. Once upon a time, State Farm was probably the best insurance company out there, but they've gone downhill the last few years. State Farm is notorious for client complaints, denying claims, and lengthy lawsuits. Last year, they denied 41.6% of all claims in the country, and they are currently facing a big class action lawsuit in California over uninsured homeowners. Number 2, I'm probably going to get a lot of people in the comments to disagree on this one, but facts are facts. And USAA denied nearly 50% of all homeowner insurance claims in 2024, which is way above the national average, which was 37%. Now, you would assume that USAA is great at backing military and veteran families, but their rates are extremely high, and good luck ever trying to get an adjuster on the phone. And my top pick for the worst homeowners insurance company right now, number 1, Allstate. You're not in good hands if you have Allstate. Last year, they denied the most amount of homeowners, over 50% of all claims being closed without payment. They've also jacked up insurance rates by an average of 12% in 2024. Yeah, they're great at collecting your money and not paying when you actually need them. Let me know if you agree or disagree in the comments, and if your homeowner's insurance company should have been mentioned on this list.
That was fun.
Again, we don't put y'all too much in the hot seat, man. If you don't feel comfortable commenting, just let us know. Blink an eye.
I feel like this should be Ian first, though, if he's willing to go.
Yeah, right. For sure. So what I'll say is it is against my license to speak directly against any other insurance carrier. However, the great thing is I always tell my clients, like, hey, talk to any contractor, like talk to a roofing contractor, talk to a restoration contractor about your opinion on Liberty, State Farm, USAA, or Allstate, and they will be honest with you, right? Especially roofing contractors, because roofing claims are one of the most expensive claims to happen and most frequent claims nowadays, unfortunately. So we used to have hailstorms every decade. Now it's every year we have a hailstorm. And so, these guys are out. If they're not door knocking, they're, getting called on a regular basis and having to deal with these 4 companies. The other thing that these 4 companies have in common is they're all captive companies. There's captive and independent, right? State Farm, if you call a State Farm agent, they work for State Farm. If you call a USAA agent, they work for USAA. If you call an Allstate or Liberty agent, they work for that company, right? As a broker, I represent a client, not the carrier. I could care less who you're with as long as you have the right coverage at the best value. So that's another huge thing. So, your agent, even if you were with a captive agent, your relationship with your agent should also matter, right? That trust really matters. So, look at the Google reviews. Just do your research on who you're choosing as your agent, because, at the end of the day, the reason claims are denied or approved is a human, right? That adjuster is going out to that claim and deciding yes or no, I'm not going to pay out on that claim, right? It's not some, computer systems. They might have aid of some of that, but at the end of the day, it's humans, and you might find an adjuster, even with the best insurance company that pays out the most amount of claims. You might just catch an adjuster on a bad day, right? It's up to your agent to go out and advocate for you and say, hey, like, no, we disagree with that because of XYZ. And part of the way that I have, and every person listening to this, one of the best ways to make sure that your claim gets approved is to first get a professional opinion from a good contractor, like a reputable contractor, to go out to give you an estimate or assess the damage before you file a claim, because you can have that same contractor come out at the same time the claims adjuster comes out when you file the claim, and you already kind of know what the professional will kind of think, right? They're going to say, yeah, there's a good odd that we can get this claim accepted because of XYZ reason. And when they come out again at the same time the adjuster comes out, they've already kind of created that story, right? So you're not getting blindsided by doing the opposite, where you file a claim, adjuster comes out, says it's denied, and you call the contractor and they say, oh yeah, you should have gotten that accepted because of XYZ. So, so in summary, those are all, every single person he said is a captive company, and, captive agents work for that company, whereas brokers represent you. Talk to a contractor before filing that claim to make sure that you understand, your odds and everything like that. And also, yeah, just talk to any contractor about their opinion on either of those, any four of those companies. I'm not sure if I made complete sense saying all that.
Well, plus Ian, the contractors are the ones working with the insurance companies. So they know, interestingly enough, they know who pays out, who doesn't, what they deny, what they approve. So they can give you, because I've had this experience, they can tell you, oh, that'll get approved, no problem, versus that is going to get denied. I'm sorry. Like, I know that is part of it, but they're probably not going to cover that from experience. So you can get good feedback from the contractor if you have that estimate up front, right? And they can help you be guided in this process of, should you even file the claim in the first place? And if you do, what should you claim depending on the amount of damage in the process?
Yes, thank you. I appreciate that. You hit it right on the head. You hit the nail right on the head. Absolutely. Absolutely.
Yeah.
Yeah, go ahead.
Dunbar, you want to go in on this a little bit, or you had any experience on this? As far
as filing claims, not really. I am the upfront person on homes, but what I will say is, and what I've been lucky enough to see in my business and my growth, you associate yourself with great professionals. So if I needed, an insurance quote, I'm going to go through your, John Flowers. I work with him as well. If I, with the guy that we were talking to from Florida, having to explain to him the difference between a banker and a broker when it comes down to mortgage loans. Education, knowledge is power, right? And everybody doesn't have or are privy to the knowledge we have. So, luckily enough in my business, I have great professionals that are good in their field, as I'm good in my field, which is, the marketing, real estate, and advertising, and, getting the house sold. But I'm also partnered with great brokers, whether it be insurance or mortgage or and even contractors. So, I mean, that's all I can say is what we always say. You talk to a professional that knows their field, and you probably won't be, lose out or make the wrong decision. I guess that's all I can say on that. Yeah.
Right. I wanted to kind of put it, I want to kind of link it to what we were talking about a little bit earlier, as far as Well, what Ian said, I'm gonna bounce off of what Ian said. You kind of have a perfect segue as far as a lot of clients that I have, especially if you're in a first time home buyer, they don't think about these things until you need it. So the cheapest ain't always the best. So you're looking at just the numbers. You're looking about what you can afford. However, you didn't read the fine line and the details. And when you do need to do a claim, and you went with the cheapest, the coverage isn't there. Now you're stuck out. Now it's a more expensive lesson to learn.
Right.
So a lot of these companies, there's a reason for why they're cheaper, or why it's not as comprehensive coverage, as more as much comprehension as you could possibly get. In my 10-year career, I've only had one person that wanted a beefy insurance policy. It's not a thing, one person ever that, hey, now I want a certain amount of coverage, so I've never had people don't care. They almost think it's like auto insurance, where as long as I'm covered, I got the minimum, state minimum, let's roll. I'll take my chances. But this is the thing that you spend at least a third of your life at least probably more,
right,
at your home. It's more of an investment. So we don't think about actually dumping a little bit of money to protect it. That's so right. But it's one of those things. It's you can't make a leopard change its stripes or spots or whatever the cliche is, right? People are programmed to certain things. Is just, I'm going to cheap out on it. Yeah. I'm going to try to get it as less expensive as possible, and I'll take my chances. And that's the American consumer right now. They don't value insurance until they need it.
Yep. It's either you pay now or pay later, but you're going to pay.
Well, what you can do is watch shows like this, the Power of Ownership podcast, where you can be a little bit more savvy. Where, hey, I'm not trying to spend $1,000 a month on insurance. However, I do, in case I need something, I want to be covered. So what's the good medium? And you need to contact professionals that's good at the game. Like you said, there's open carriers. I mean, there's closed carriers that only going to promote their products. So you call State Farm, most likely they're a State Farm agent, and they have State Farm. That's what I tell people all the time. What Dunbar was saying is that you got these bankers. I'm tying these two together. They promote Loan Depot. They promote Wells Fargo, and that's it. They have their products, their menu. And we're like, as a broker, we're like Uber Eats. I have all the menus. So I'm going to pick the one that's best for you and to fit your situation, not that I have on the menu. So so if you want hamburgers, I got hamburgers. You want chicken burgers, I got chicken burgers. You want fish, I got fish. So I don't have to sell you a hamburger when you want fish. Am I making sense? I'm speaking metaphorically here, but y'all get what I'm saying. So absolutely. With that being said, you need to get with brokers that at least have the options to get you what you need to tailor make your coverage to your situation, as opposed to trying to get sold in what they have. Does that make sense?
With the with insurance brokers, at least we're not like more, you're not paying me more, you know what I mean? Like, we all get paid the same, whether you're a captive agent or an independent agent. We're just getting paid a commission off of the premium, right? Which is approximately the same. So going to a broker is literally not more expensive, at least in the insurance industry, than going straight to State Farm or USA or Allstate. Or
it is actually cheaper because you got a personal shopper.
Yes, sir. Yes, sir. You're not calling an 800 number. You're talking to the same guy.
All right. You got somebody that's going to shop. Think about it. I mean, did you ever try to shop for like different insurances, calling place to place? And you try to compare these. You got somebody that's going to do that for you free of charge. You're getting the same exact. And then you got one person I'm going to speak to, as opposed to when you try to call Progressive, you're going to speak with somebody different every time.
Every time.
And then what about the hold times? How long you'll be on hold?
Right. Yep. I love doing that exercise, honestly, where
Right.
I'll call my office if I'm with a client. I'll call my office versus call the carrier directly.
Right.
You know,
How long you'll be on hold?
my office picks up on the second ring, first ring, and I might be on hold for 3-4 minutes with the carrier.
Right. You ever been on hold with Progressive before? One of them insurance carriers, you can be on hold for 45 minutes. And then luckily if they speak English.
Yes, sir.
So good luck with that. David, you want to go in on a little real quick?
Yeah. So I want to point out too, most people look at a broker for the sense of shopping, but remember too, I think even more important than that is the advocacy for the client. Because as you just pointed out, Dixon here, that you call up the company and you say, hey, I got a claim, I want to have this happen. Who are you talking to? You may or may not have a person helping you that's going to be helpful, and you're going to go back to your old person. But guess what? How many people, and I'm not saying that this doesn't happen across the board with all industries like retail or broker, but in general, a lot of times these retail guys get a good contract, they get a salary, they come into these captive agencies, and then they leave. And then they do something else, or they might go broker. And you're not able to have an advocate to help you through this process. But if you have a good broker, a solid established person like Ian, they can go fight for you. They can help you in the claims process, which is, in my opinion, even more important than the upfront shopping process. Because you want to get a premium, but more importantly, you want to get coverage on the stuff that you're trying to get claims on when you need it.
Absolutely.
Which my second point with that is, not everybody might know this watching this, but I used to be insurance licensed, and I used to sell P&C insurance. So I understand it better than most mortgage professionals, but there is definitely there's pieces of the industry that some companies might be better at than others. Some situations, credit score might play into it. Your past claim situation, like there's so many things that plays into this thing that could affect whether or not you get a good premium with this company or carrier versus that one. And that's why you want someone that can shop, because if you go to one person that's captive, I mean, like, I'm not trying to knock any captive agent. They might have good products, good service, good companies behind them, but how do you know? Like, you're working with one. It's the same argument that we make here at Nexa Lending as the largest mortgage brokerage in the history of the country. As of today's timestamp, I have 302 lenders I can go shop with. I would challenge anybody in the country to beat me. They can't. We are absolutely untouchable on interest rate pricing. We know every single lender out there, the pricing, the structure, the company model, and we know what fits, more importantly, the product the client needs. Because there might be this one little weird thing that only one or two lenders in the whole country does that we need. And guess what? We're the only ones that have it. That's why
there's that many lenders.
Yeah, 302, right? Like crazy, right? Like, and I pride myself on trying to get to learn and know these things. Like, that's my main thing, is like, I got to get to know all of this so that when a client calls me, they know they can rest assured. Like, although everybody says, oh yeah, we're a broker, we shop. No, I actually do. I actually do look at all these things. I want to make sure it's the right fit for you. And they all have different pricing incentives that they'll change throughout the month, and different things that they pull in and out of the market of products. And it's an evolving process. It's a full-time job, just keeping track of who has what.
Yeah, I'm learning that right now. Like I said, being out of the loop for a little while, I had to get my Willie Beeman on, and I forgot the speed of the game. So I probably made one or two mistakes here, which I normally never make. So I went to MFS, which that was and that was before UWM pulled out the bond program. So I'm never again. Once I close these two loans, never again.
Yep. So
MFS.
good point. You need a bond down payment assistance program in the
Right.
mortgage lending space. There are dozens and dozens and dozens of lenders that do this. They're all a little bit different. So which one's the best? How do you use it? Well, it depends on the client. It depends on the property. It depends on like all these other things. So there's
some
so many factors
do
that affect
things better than the other as well.
Yeah.
Like no comparison. They're a lot different.
Right. But without getting too far down that tangent, because that's not the focus of this video or commentary, of course. The other thing I was going to say is I'm going to argue all professions have this issue. Like you mentioned earlier, Dixon, about, cheap, fast, or value. Like you got to pick what you want in this whole thing. That's every industry. If you want the best possible insurance coverage, like maximum coverages, best possible comprehensive plan, that's going to cost you something. You asked the question of like who here ever gets excited about insurance? Like me, I do. I love the fact of I'm an insurance advocate. I love that I know if I die, my life insurance will take care of my wife for life. She's got millions of dollars coming her way. I feel good about that. But you know what's cool about that? I learned that, understood it, and bought it back when it was like $25 a month. So $25 a month I'm spending, and if I die tomorrow, she gets millions of dollars. Cool.
Heck yeah.
Like that means a lot to me. And if I lose I got to do it just right. If I lose my arm and my leg, or both arms or both legs, you got to do it just right for disability insurance. But if I lose it just right, then she'll get income from disability insurance. And
don't say that too loud for her to hear.
Right? I know, right? She actually threatened to punch me today. I gotta be careful what I say. Homeowners insurance, same thing. Like I have, as an example, I have 35 solar panels on my home. That's a lot of value right there on top of the normal value. So if my cost to rebuild, like my home is worth roughly $400,000-ish in my local market. Like it's nothing special. It's a 4-bedroom, 2-bathroom, like nothing special. But that's a $50,000 value add-on. I need to make sure that when the cost to rebuild happens, they understand that we need a $550,000, $600,000 rebuild cost here, because we need to make sure the solar panels are included for the actual cost that I lost. But that costs $10 a month more in premium. Who cares?
Right.
If you're trying to like save pennies, don't do it. If you don't want to do it, don't do it. But I'm just gonna argue, go with the extra coverage. It's so cheap. Just do it. And by the way, buy that umbrella policy, because you know what? That umbrella policy that's like $200 a year or $300 a year, that gives you an extra $1 million on top of your insurance that you'll probably never need, gives you discounts in other insurance places, so it practically works out almost for free anyway. But a good advisor, like my buddy Ian here, who I've known for 12 years since you started, right? Like literally we met each other when you first started, I think. If you get a good insurance agent like this that'll guide you, then you're going to be covered, because that's the most important thing. You buy insurance to protect your family. If it's not going to protect your family, then what's the point?
Absolutely. Right? And it's not even a matter of if something will happen. It's a matter of when will it happen, right? Mm-hmm. So, you want to be prepared for when it will happen, because, do you want to talk to your insurance advisor every single year? Probably not, right? So set it up right the first time, because you're probably going to forget it, right? And, when something does inevitably happen, you can rest assured that, hey, I'm covered. I listened, that's when your advisor should shine.
By the way, I did have a client call me about 4 or 5 years ago. She said, David, you helped me 10 plus years ago get my mortgage, and we accelerated our payments. We paid everything off and we paid the mortgage off. but our house just burned to the ground.
Jeez.
And we have no insurance because we canceled it. Do you have any options for us? And I'm like, no. I truly wish I could do something, but if you canceled your insurance, because if you don't have a mortgage, technically you don't have to have any homeowners insurance.
Mm-hmm.
They canceled it. They're like, we don't need it. We paid off our mortgage. We don't need any insurance anymore. And they lost everything. They never, I called them a couple times after. They never answered my calls. I didn't find out where they went and how it all worked out. But that was one of the worst calls of my career, to find out that, and because I felt responsible. I'm like, wait, why would you do this? And I felt terrible that they did this, because obviously we did it at the up front. We made sure it was properly protected, but they weren't properly protected later. So it's very important that you keep this coverage no matter what, forever. Buy insurance. I know it sucks paying the money to do it, but it is worth it. It won't matter until it matters. Same as when my dad suddenly died of cancer at 53 overnight practically, and my mom retired on that money. She is still living on that money to this day because I put an insurance policy on my father that he fought me tooth and nail for 4 years to put on him, by the way. So buy insurance. I am not a licensed insurance advisor, but I cannot stress enough. I have had so many cases of clients and family. Buy your insurance and find somebody like Ian or a broker in your local market that's licensed in your state that can shop this, find the right value, and do the right thing for you.
No, absolutely. And because it's a lifelong investment, when things do happen, one thing that I kind of pride myself in having the relationship with my clients is being able to talk to them through some of these hard times, like when COVID happens, where it's, hey, I lost my job. Like, what can we do temporarily that's not going to leave you completely, naked, that could like cover you for this amount of time, and like, let's talk in 3 months, right? Or people with, who are closing on a home, where it's like, hey, Ian, I really want this coverage, but I got to close on this home. It's like, hey, it's okay. This is the most important part that you need to have for something catastrophic. And let's not let Murphy's Law win, because whatever bad thing can happen will happen, right? So like, you should be able to have a conversation with your advisor, your real estate advisor, your mortgage advisor, your insurance advisor. These are big deals. Like, these are the biggest investments you can make in your life. And especially with insurance, where it's a lifelong thing, where it's dynamic, kind of like taxes. Don't be afraid to call and just have that conversation, because as your life evolves, your insurance should evolve with it. And there's just a lot of things you just don't know, right? Because it's almost overwhelming. Like with taxes for me, I wish I knew all the loopholes, but I got to talk to my tax guy every year and just say, hey, like, remind me what I need to do. Remind me what I need to look out for or think about. And, some of these conversations aren't long, your advisor will guide you through that conversation and say, okay, like, have you done any updates to your home? Oh, okay, you got a new water heater, that's a discount. You got a new furnace, that's a discount. Your roof is reaching 20 years old, just so you know, your insurance policy will only pay out 60% or whatever it is, right? And now okay, I got a budget for a new roof, or hey, I got to pivot in this way, right? So have a good relationship with your advisor, whoever it is. We're all good people in this podcast specifically. So work with someone that you trust, someone that you are like, just you can just talk to. Like, kind of like a friend. You're like, hey, like, what's going on? You're not bothering either Brandon or David by calling us and just touching base, or just there's no such thing as a dumb question for any of us either, because it's overwhelming. It's an overwhelming amount of information, and it's okay to not remember every single detail. But the more important thing is just to remember that, just to call us for anything. No such thing as no
And
question.
Ian will give you a check. That's what I heard. Every time you call your insurance agent, Ian will give you a check of, oh, water heater, done. Let's discount your pricing or your premiums.
Gotcha. I know Dunbar got to run, so we had a couple more clips. We might be able to get one. So let's go ahead and let Dunbar react to this one first, because I know you got to run, right? So let's, yeah.
Yes,
So-
sir.
Yeah, so I want to do one like antagonist, like from a different perspective. Let us rebuttal that. So I'll let you go first on that, because it's directly to real estate as well.
That's good.
So, yeah, so we could get them a little bit more punchier. All right, can you see the screen?
Yep.
Yes, sir.
Money. If I want to be wealthy, if your goal is to become financially independent at a young age, you probably don't want to go buy a house. The reason you don't want to buy a house is because houses dramatically inflate, by and large, your cost of living. If you stay in a apartment that is just enough to meet your needs, your costs will be lower.
Explain why my cost of living goes up if I buy a house.
It doesn't have to, but people typically buy the most house they can possibly afford. The industry drives them that way. If you go to a real estate agent and you say, I want to buy a house, right? First question they're going to ask you is, how much do you make? And then you go to the bank and you say, okay, I want to buy a house. How much will you lend me? And they'll say, well, how much do you make? And then they'll come back with a large number of how much they're willing to lend you. If you follow those guidelines, you're going to wind up with a house that's going to be a burden. You are not buying it from a position of strength. You are stretching to buy it. You are borrowing the most money a bank's willing to give you. You probably don't want to do that. When you buy that house, I don't know that I've ever known anybody, including me, by the way, who's owned a house without doing renovations on it. So you've got those costs. You're going to furnish that house because you're probably buying more square footage than you were renting before. You're going to need new furniture, or maybe you just want better furniture for your new house. Maybe new appliances, landscaping, taxes, maintenance. I mean, the list is endless. And people say, well, I can buy this house. My mortgage is the same as my rent. Well, yeah, but your mortgage is just the starting point. You've got all these other expenses with the house. And the other thing is they are variable expenses.
On a previous conversation where we talked about whether you should buy a house, someone said, I bought a house and it's the best thing I ever did.
Right.
It's launched my mindset in new directions. Remember that having your own space has profound psychological impacts and can be life-changing for some that don't live in a healthy environment. The psychological impact of buying a house.
For him, obviously, it's absolutely true. I am not anti-house. As I mentioned a moment ago, I've owned houses most of my adult life. But I've never bought them because I thought they were an investment. I bought them because I thought they would enhance my life in a way I wanted it enhanced. They would make my life better. They are, in my view, an expensive indulgence. And if you can easily afford it, then by all means, buy the house.
What is something I should know?
So Dunbar, I'll let you I know you got to run. So our house is an expensive indulgence.
I'll start off by saying this. Just because you have $1 million pre-approval doesn't mean to go buy $1 million house. And I'm going to tell my client that from an initial meeting, you don't want to get into anything you can't afford. So you want to make sure that whatever you're getting into, you can afford. And you do that by still buying below what your pre-approval is, more than likely, right? It's a couple different factors. you gotta realize there are hidden expenses to owning a house. If stuff breaks down and is not covered by your insurance, or you do want to do renovations, those are hidden costs to owning a home. But you also are building up equity, and which is gonna at the end, on the back end of that, is gonna serve you better than renting any space that you can think of. But you start off with good consultation, right? If I have somebody with $1 million pre-approval, I'm not going to say, "Hey, let's go get $1 million house." I'm going to say, "How much do you think?" Or I would probably get with you, Dixon, and I would run the numbers on different scenarios. A $500,000 house, a $750,000 house, a $250,000 house, and we would break down the monthly expenses, or the PITI to those, and we would go with the most comfortable number to who's ever buying. I don't think that it's an indulgence. I think that it does help psychologically, but you do also have to realize that if something breaks down that's not covered with your insurance, there are hidden expenses that comes with a house. But is at the end of the day, you build an equity, and you can take out loans, or if you need to, you can have payment plans to get stuff fixed in a house, as opposed to and while still building equity, as opposed to renting that's 100% interest. So I mean, I don't think it's an expensive indulgence. I think that it is, if planned out correctly, is in the long run, you will benefit more than renting any space, and you can still build your wealth accordingly.
Gotcha. I know you got to run, so I'll make mine real streamlined, and I want to attack it from this angle, and to kind of squeeze everything together that we've been talking about. Yes, it absolutely makes sense, but I want to harp on the point that you can't make a leopard change its spots or a tiger change its stripes. We might have to meet them where they're at and reimagine the benefits.
What makes sense? I'm sorry.
Huh?
You said it absolutely makes sense.
Yeah, it absolutely makes sense to us because we're thinking with logic. We're thinking with overall wisdom. However, this new generation, and I would argue that some millennials as well, have changed their way of thinking. And it's a new age. It's a new way of thinking. They don't want to have ties to anything. They don't look at the long run. They look at the instant gratification. How am I doing right now? Am I benefiting right now, and not looking at the future? And I would say let's merge the two. Like I said earlier, somewhere in between, there's a median where you can plan for the future. However, you don't want to tie yourself down. Where you limiting your options, because millennials were huge on this, and Gen Z is huge on this as well. Options. They want options. It's called tenants in common. Tenants in common. And this is what we have in mortgage. That's a term that's used that, hey, let me get a group of my buddies together, 3-4 of us, and let's go on the mortgage together. And that way, instead of renting, I could still be buying a mortgage, and we're still saving equity, and we can share in these costs. We get a duplex, we get a triplex, we get a quad, and we all go in them together. So reimagine your way of thinking. And like I said, if one of us find a girl, you buy us out, as opposed to just going to an apartment complex and you're throwing your money away. There's somewhere in the middle that you can probably meet, and you probably have to reimagine, because there's ride sharing, there's pad share. That's the future. All right, you guys don't want to commit to it's too big of an investment by yourself. Get a bunch of your buddies. Get a couple of your buddies together that's on the same accord, and that way you can make be somewhere in between where y'all can all share expenses until you get married, until you want to get your own thing, until you're mature enough to, all right, I want this particular investment by myself. There's other ways to do this thing. So I think we got to reimagine for this next generation. We got to reimagine the stuff that was common sense is no longer common. They want to stick out. They want to do things different than we did. We believe in the delayed gratification. All right, I'm gonna stage this equity. Then when I cash out, then people are staying in houses less and less tenure, less and less amount of time. Cool, 5 to 7 years, stay in this house, and then when your buddy gets married, buy him out. Or y'all sell a house and y'all split the proceeds. It's all kind of ways to do this thing. So I would say tenants in common. A lot of people don't preach that. Tenants in common. Look that up. David, you want to go in on that?
Yeah, tenants in common. It's a way to hold your title deed. I think, interestingly enough, if you actually just Google search like average homeowner net worth versus renter, just Google it. There's actually multiple studies done on this over the years, but the National Association of Realtors says that homeowners are 43 times wealthier than the average renter. 43 times the renter. That's a lot. I mean, not double, not triple, 43x. So the math, as The Incredibles says, right? Math is math. For anybody that knows Disney Pixar, math is math. That's what it is. You can argue all day long that you want of like this strategy. There's a lot of cool strategies. Like you said, Dixon, on, if you want to get into crowd sharing or like, doing this special platform, this thing, get into commercial investing, get into real estate investing. Like there's a lot of cool things you can do outside of this space if you do it the right way. There is an argument for renting if you do all the other things surrounding what you need to do to build wealth. But the reality is 99% plus of people that would watch this video right here are not going to do those things that we talk about in other shows. Go back and watch some of our other shows where we talk about this stuff, or go look up these kind of videos online. If you watch these things, you could do that. But the reality is, if you just simply buy a house, you're going to automatically see wealth increase over time. In fact, it's funny. If you go back over the last almost 90 years of a track record, home values have only dropped about 5 times in the last 90 years, and they all happened pretty much in the recession period. Back in 2008, or leading up to 2008, 2005 to 2008. So in that one period in all of 90 years, you bought a home and then you sold it right after, you would have lost money. But if you held on to it, you would still be tens of thousands ahead today, even if you bought in the worst possible time of the market. You'd still be ahead today. So the math says buying a house works out in your favor every single time. Not to mention, if you have a good mortgage advisor with the right product, the right term, the right structure, you're refinancing as rates drop or circumstances in life change, and you use your equity position to use this cash in your home that's just sitting there, and you use that in the right way as an investment strategy for other things, like buying the second home, the third home, the fourth home, or whatever else you want to do. Now you can turn this thing into an investment vehicle that just is a perpetuating powerhouse that can grow. And it's interesting to me how our age group, like I'm going to say like our age group-ish and below kind of gets that more. The very young generation is thinking more, well, let's just rent. I don't want to take on the responsibility. And the generation of just above us is thinking, I want to get a 15-year, 10 years, 5-year term and pay my mortgage off as fast as I can, which is also the wrong mentality, because you're putting all this money into an asset that's generating the same rate of return, by the way. Doesn't matter if you have a mortgage or not. If your house is $400,000 a day and you have a mortgage, and next year it's $410,000 and you have a mortgage, it's $410,000. If it's $400,000 a day and you don't have a mortgage, and next year it's $410,000, it's still $410,000. You don't change anything with the mortgage. Yes, you pay a little less interest, but you're going to pay either way. So if you look at it through the lens of rent or mortgage, either way, it's a sideways move. All that equity sitting in your house essentially is growing at a 0% rate of return. Why not access and take that equity and go utilize that, talk to your financial advisor, look at marketing strategies, look at investment strategies, and go utilize this equity to go invest in other things. And you could do what he's talking about here of, like, I don't know about doing this. Like if you want to buy a house, but, like just rent. I just don't believe that's the right mentality. Focus on the investment opportunity that you have by buying a home and then extrapolating that over time. I can't tell you how many clients I have that bought one home and then 2, 3, 5, 10, 20, and they've got millions of dollars of revenue coming or of equity now, thousands of dollars a month of revenue from their rental properties if they're buying and holding, or hundreds of thousands in the bank sitting there that they've cashed out from it that they can utilize for other things. You just flat out can't do that as a renter unless you're using the money that you're saving in some rental situation to go invest in something different. But if you don't know what to invest in and you don't have the exact game plan, there is almost no world that renting beats homeownership. It just does not exist. So I'm going to argue strongly, buy a house as fast as you possibly can. Buy a house. You will come out ahead almost every single time. You would be the rare exception to that rule if it doesn't work out in your favor.
And Ian, before you go, don't forget to like the video, hit the comments, and don't forget we'll answer any questions live on the air as well. So Ian, I want before you go ahead,
I got one thing just to
Right.
double down on what David said. I mean, and kind of what I said is you're not gonna be buying a house with renting, and you can always do numbers to make sure that you're comfortable with what you are spending a month. Like, don't forget that, and don't forget that whatever your pre-approval says, you don't have to go the max. Like, it's ways around. It's ways to make sure that you're going to be comfortable long term. And on top of that, every year that you rent, unless you have a multi-year lease, the lease is the rent is going to go up.
Mm-hmm.
The rent is going to go up.
Well,
so
let's call it for what it is. It's all psychological. I mean, most people know that buying a house is better than renting. They know that. Just like it says on McDonald's drive-through window, hey, this food will cause cancer, but the line is still around the corner. People know that.
That's a good analogy, actually. I like that.
Yeah, so they know it's not. They know McDonald's is not good for them. They know Chick-fil-A is not good for them, but they still do it. Why do we still rent? Because it feels easier, even though the process is not. It feels easier. It's all about feelings. A lot of people are driven by how they feel about it. The process. I can't spend anything. I gotta run my credit. I gotta do this. I gotta do that. That scares the living daylights out of people. Let's call it for what it is. So most people are rather instead of going through that process, they think your rent is I could dip out at any time. All right, if I don't like this, I could just go somewhere else. You can't really do that. It's the obligations that scares people. Let's call it for what it is. They're scared to be obligated. You can't just dip out on your mortgage.
Yep.
So you can't.
Can I add one point before the other points here? Your point about that, there was a lender who shall not be named that had a very clever advertisement that was even, I think, on the Super Bowl at least once or twice. That push button, get mortgage. Right. I think you know who that is.
It's still. I don't think it's they know it's gotten a lot easier as far as docs and all that stuff.
It has.
Consider that, but it's the obligation.
But that's my point is they were very clever in the marketing because that's what people want. They want this process to be easy. And the honest truth is buying a home isn't that hard. It is easy. if you have the right team, the
Yep.
right team behind you. If you don't, and you're just going online trying to figure out your pre-approval and like, well, how do I buy a house? And you're Google searching this stuff, and then you're reading the commentary and you're looking at all the horror stories, and then you're going to your local, not throwing anybody under the bus, but your local bank or your local online place with this unlicensed, federally chartered person that may have no training at all, that started yesterday, that doesn't have a clue what they're doing. This might be their first application they've ever taken. How are you supposed to expect the thing to go well if you don't even know who you're working with and what they know is correct? If they're telling you what they're telling you is correct, you can't trust it. So there is an easy button. There is an easy button, but the easy button is not clicking online to make it easy. The easy button is call your local mortgage professional, realtor, insurance advisor, financial advisor. Call and talk to your people. Find your people, as who does that song? Find your people.
But most of let's be real. Most people are FOS. They don't know what they're talking about. I would say that's the majority of people. So how do you know how to find your people? Most people don't know. They go by all superficial things. Well, I like her glasses. So you know,
or Brandon's beard. His beard.
Yeah, I like his beard. Let me. How do you know? There is no like. Besides, I gave Dunbar a tip, and you know, I don't want to stall Ian out. I know we got to move pretty quickly, but I gave Dunbar a tip. You could always go to the NMLS Consumer Access and put their NMLS in, and you could look at their history. If they were slinging pizzas last month, chances are they might not know what they're talking about. You know, and you can look this up. So whenever you get a prequal, Dunbar had a prequel early this week, and we looked it up, and you know, there's hardly no history there. And then they don't forget that bankers are not, they're using the bank's license. They're not licensed like we are. You know, so it's a difference. So
I just did that in the chat, by the way. So if anybody wants to look up me, Brandon, or anybody else, you can go actually look up any mortgage professional in the entire country right there for free as a consumer, and you can see who they are. Is their license active? Do they have any misdemeanors, felonies? Has it ever been revoked? What companies have they been with? You can see the whole thing, fully transparent. Go look us up. Go look up your person in your market.
Well, the biggest thing is how long have they been doing this?
Exactly.
And then, all right, and then the second thing you want to look at is, all right, if you've been doing this long, every couple of months do you switch companies?
Right.
You know, how long have you been somewhere? If you only been somewhere a couple of months, chances are you going from pillar to post and living off the guarantee. And then once the guarantee's gone, you'll find somewhere else.
To be fair on that point,
right?
I have moved companies 3 times in 4 years.
Right, but I'm talking about
trying to find my people and get the right position place that I needed. So it wasn't for the same reason others might move. So be careful with that too. What you're looking for though is, to your point, Brandon, if you see like 20 years of history,
and 20 different companies, that's the issue. Like that shows you a lot. But Ian, you want to go ahead briefly get on?
I'll be quick.
Right.
Just to summarize what you guys said is, you know, interview the people the professionals that you work with. You know, those tough questions. Any reputable person should have no problem answering, right? So, you know, it is some work to find the right people, but you just got to interview. Got to interview them. But usually, if you find one good one, you know, you can usually trust the rest, because we try our best to have the people that we refer, or referral partners, be a reflection of us.
That's
right.
Good.
So it'll cut out some of that research, but you should still do your research.
I think if they're not on the podcast, don't use them, man. I'm just
but I do like the statistic that you brought up, David, about you know, there's only 5 times in history where, and correct me if I'm wrong, where home insurance prices have like dipped a lot.
Yeah,
Um,
home prices, not home insurance prices.
Sorry, I'm so sorry. Yep, home prices. Thank you so much. And I think renter, the price of renting a home has only dipped it's never dipped. It's always gone plateaued
It's gonna
or
go up.
something like that. So your rent will always rise essentially, right? So you can guarantee that. And I was a big proponent of, kind of like getting the house by any means. So I was guilty of kind of preaching that, like, hey, just figure it out. But a big part of that was because I always thought, and I was always comfortable with like sharing a house, right? So you got to live below your means, and when I was young, because it's good to start when you're young, I was fine living in a closet. I was like, I don't care, I'll just rent the rest of the house, right? But that's like living below your means. So when you do qualify for this house, even though you can afford it, do you have an extra bedroom that you're okay renting? Because if you can't pay for it comfortably, you probably should think about, what you got to do to live below your means, right? So that's all I'll say. I just kind of wanted to ping pong off everything you guys said. So I think it was all great information.
I got one more because I know David and Dunbar got to go, so we're gonna kind of end it on like a philosophical one. This is the clip isn't too long, but it's the actual after discussion that I think is pretty potent. So we're gonna watch this clip and then discuss it. Dunbar, you might want to stick around for this one because you're a gamer. So so
I game when I can, which is not often, but I do enjoy a game or two.
Gotcha. So let's go ahead and run this one.
Before you play that real quick, I just want to throw this one thing in the chat, if this will work. I think it'll work. There we are. If you actually search that in AI, that might be too long.
Yeah, definitely.
There's the actual stat, by the way, I was quoting there. So I want to point out I am wrong 6 times, not 5. 6.
Okay, all right.
6 times the home prices dropped, but you can go Google search the topic here and find the stats.
Gotcha. Let's run this last one before we head out for the week, and let's go. This is a pretty good discussion, I think. Y'all see the screen?
Yes, sir.
Gotcha. All right, let's go ahead and run it.
It says here that a psychologist explained why 90s kids think differently than Gen Z. The games you played as a kid literally rewired your brain. And here is what changed.
Okay.
He said children in the 90s played games that forced the brain to fail and try again. Mario, Sonic, Prince of Persia, you had 3 lives, no saves, no hints. When you lost, you learned patience, planning, and frustration tolerance. Today,
yes, you did.
Right? Today,
yes,
many games guide kids step by step, auto-save every 10 seconds, and remove real challenge. Goes on to say that Tetris, Doom, Quake, Zelda, you had no map, no path arrows.
Bro, when I played Zelda for the first time, and I played it, the very first time, I'm like, this game's crap. I hate it. And then maybe I cleared all my other games. I put Zelda in and I started playing it. Then I started playing it.
It's most fascinating.
And then I broke a wall. I'm like, I broke a wall. And there's something in the wall. And then I used my sword broke a tree and I got like something out of a tree. I started trying to navigate every single inch of that game. And it turned that game into an amazing game.
Right?
Yeah.
So it says you, sir, remembered layouts, patterns, secrets.
Yes.
Scientists now show that these games strengthened the hippocampus, the part of the brain for memory and navigation. Modern games often give glowing lines, GPS arrows, voice assistance. Kids follow instruction instead of figuring it out. Right?
Boring.
You had to stop when you failed. Today's games are endless. Fortnite, Roblox, what's this? Genshin, Minecraft, built to keep attention forever. He said this trains a different circuit. Instead of finishing tasks, kids get addicted to constant stimulation. One parent said, and this is good, my son never knows when to stop. The game ends him. He doesn't end the game.
Wow.
That never happened with Sega or PlayStation 1. Sure, this makes sense.
Actually, it's on my time to go first, so actually perfect. And Dunbar, if you need to go, like if you want to come in after me, that'll be great. Just let me know on that. But man, I brought this up in a discussion the other day, and it explains a lot about what's going on. I don't think that's the end all be all as far as video game, but it is a part of an equation that's changed as far as problem solving and resolve and in perseverance and overcoming challenges that I don't see a lot in this generation. I see a lot of bouncing from different things. If this doesn't try, if I don't work, if this doesn't work, I'll try something else. I'll try something else. I'll try something else. And it's nothing to completion. I was always taught to, hey, all right, I start something, I'll finish it. Win or lose, I'm gonna finish it. And this is what it is. If I lose, I'm gonna lose like a champ. And I know that sounds crazy. I know that sounds like an oxymoron. I know it sounds something that's polar opposites, but there's a way to lose or fail like a professional, like you have something keeping your head high, even in failure, should I say. That's what these games taught me. That's what playing sports taught me. I don't see that now. I see participation trophies. I see everybody's a winner. I see, things that, like I said, there's no end, just to stimulate you. That's what I was telling David when we had our first conversations. I was like, yeah, streaming works different. It's not about here's the beginning of the show, here's the end of the show. It's about how long can you go? How long can I keep these people attention for? And and most people are going to be in and out, but how many of those in and outs can I get in 3 hours, 4 hours, 5 hours? That's the name of the game. It's change. Now, if I get somebody for the whole 3 hours, I won. So how many of those I can get? So it's change. It's about stimulation as opposed to accomplishment. If that makes sense. Mm-hmm. So how does that relate to what we're talking about as business and as far as ownership? I think if you don't have that resolve, it's going to be tough in business, because business, you're going to get punched in the face. And it's how do you respond to that punch in the face? It's going to make or break you. A lot of people, as soon as they get punched, they go, they're out. I'm out. I'm out of here.
They don't even try.
Yeah, are they scared to even try? Like we talked about with homeownership. It's the obligation. They're scared. They don't want to be, all right, I'm stuck in this house, I can't afford it. Somebody's gonna laugh at me and parents are gonna, but when that lease, I can get out of that lease and nobody know. I just didn't like it. I can say there was mold or something like that. It's easy to ditch. So it's a difference. So it's like, damn, why we beating this? We've been saying this for 9 years. I've been saying this for 9 years on the Power of Ownership podcast. Hey, everybody knows ownership is better than renting. They know that. But it's something that's inside of them. They're scared. It's the fear. It's not. It's the anti-resolve. I don't want to see it to the end. It doesn't feel good. It scares me. So it all kind of relates. And all of this kind of relates. It's all about something's got to be inside you to, I'm gonna finish this no matter what. And however it's gonna go, I'm gonna get into it, and I'm gonna pay this thing off. I'm gonna get a house. And the guy would have said the clip before that, he said that when the viewer chimed in, he said it does something to me psychologically. That's the part he missed. it's that sense of accomplishment. Every morning I get up and make the bed. Nobody's coming over. But why do I get up and make the bed? Is that first thing, that sense of accomplishment. It's done.
It's a good book.
You know, I'll go ahead and yield the floor from there. Dunbar, you got to go.
Dunbar, you're next.
Yeah, let me go ahead and I am gonna bow out. So I think resolve is what, you know, as far as the video games go and how it correlates to life. Because once you lose in those games, you think about what you did to lose, and you think about things that will help you out in the future and what not to do. And that's just the same thing with business and life and sports. Failure is not failures or lessons. So it gets you in a mindset to where you thinking more critically on what your missteps were, so you don't take those same missteps going forward. And right. I think definitely those type of games helped. Playing sports helped. You know, anywhere, any opportunity you had to improve by failing and not just tucking your tail, and you can actually, you know, critically think about what you did wrong and not do those things again, is embedded in you. And like I said in a couple of episodes ago, your upbringing too. Because if everybody around you are failures, then, you know, if you fail once, that's it. But if you have a good, positive, you know, upbringing and you know, any type of nurture that's not foo-foo, that, you know, that you can actually understand that you did something wrong and to not do it again, that all that ties into being a good person and being a good businessman or woman, or be a business person. But those games did definitely help you as a child, you know, in your childhood to realize that failures are not failures or growth and room for improvement. And then with that, next week I'll be here. Y'all have a great night, and then peace and love.
All right. I'm gonna push against you while you're going, but you know,
it's all good. Man,
right.
See y'all later.
All right, man. Later. I mean, the kind of, I get what he's saying as far as the upbringing, but how many people, let's be honest, were taught to fail gracefully? You know, most people, you know, we weren't taught how to fail. You know, we kind of got ridiculed for failure.
True.
You know, so let's be honest, and we that's why we have a phobia of failure, because we don't like the being ridiculed. We don't like being undressed. So that's why we don't like the fails. How many people? Hey, all right, that's why. How many people, parents, constructively criticize them when they did fail?
Mm-hmm. True.
You know, so let's be honest. So it's not just necessarily upbringing. Upbringing, most people didn't teach you how to fail. You just kind of learn. You know, when you first start walking, you fell down and you got up.
Right.
Ian, I would like you to go next before me, if you're willing to. And by the way, I know a little bit about your background. Just throwing out there, maybe this might be a great time to share that point.
Okay. I don't know if I'm going to hit what you're thinking, but
okay.
You know, I personally come from Kenya, so I come from Kenya, and you know, it's considered like a third world country, quote unquote, right? And you know, it's kind of like, it's by any means in Kenya, right? Because there's not as much opportunity as there is in the US. So when I came to the US, I saw how kind of the systems of, you know, like No Child Left Behind, things like that. Whereas in Kenya, you know, you had to pay your way through elementary school. You had to take tests and exams that were difficult to go on to the next grade. And if you didn't pass, then you get held back a grade, and your parents would have to pay again. So when I came to the US, I was like a grade ahead. I took 2 weeks of ESL, which is like English as a second language, those classes. And, you know, I was a year ahead when we came here in terms of all subjects, because there wasn't that, you know, hey, there's no participation trophy, right? It's you make it or you don't, right? So when I turned 20, after I graduated college, I knew that, okay, like I had that presence of mind to see the dichotomy between the US and Kenya, where it's like, oh my God, there's there's no failure in this country. You know, you can, you know, on the extreme side of things, you can even file for bankruptcy, which is not something that is available in every country. So, not that was ever a thought, but I was like, oh my God, like let me see what I can do here. So I started my agency when I was 27, and you know, I took a lot of inspiration from people like Richard Branson and Gary Vaynerchuk, and a lot of these business moguls and things like that, where, you know, if opportunity knocks, you know, let open the door, right? So to me, there was really no failure, especially if you start at a young age. There's absolutely no such thing as failure. You know, a lot of those people that have made it, I've learned, you know, I think on average, most of the entrepreneurs that are successful start their business at 40, right? You know, there's a lot of actors who started their acting career later in life, after 40. So it's all a matter of perspective. And yeah, failure, I mean, with food on the table and, you know, a loving family, you know, what is failure when, you know, your parents love you? You know, there's no way you can fail, right? What's failure if you have a good support system, like David, you know? You know, David started his career, and correct me if I'm wrong, but I think he started when you're like 18, right?
19, close.
19.
19, just turned 19.
Okay, yeah. So like you also, I think me and you, David, I don't know what inspired you and why you became that way and so dedicated at such a young age. But, you know, I think that's what sets any young entrepreneur apart now, right? If you start now when you're in your 20s, or, you know, if you're like David, start prior to 20, like there's literally, it's impossible to fail if you just, you know, start with whatever dream it is, you know, whether it's artistic or in the trades or literally whatever it is, you know, there's no failure in, if you start young and you go 110%, because God has promised it to you. And I don't want to get religious, but, you know, like, there's no failure if you go hard and start young. So I don't know if I touched on David, but
yeah.
Before you go, David, I want to push back a little bit. Not really push back. I want to kind of bring up an interesting subject about what we're talking about. Do you think that the U.S. the pendulum has swung too far to the other side, to where when you say Kenya, when you describe Kenya, it seems to me like a lot of masculine energy. Like, all right, it's fight or flight. I mean, it's fail or I mean, it's fly or fail, feast or famine. There is no safety net.
Right.
There is no government handout. There is nobody coming to save you. You either gotta perform or you perish.
Right.
So that kind of puts a lot of stuff in perspective. Like, all right, I gotta stay laser focused in order to win. There is no I spent all my money and I spent all the money that you lent me too, so I can't pay it. So pay it for me. There's no bankruptcy where you're from. So there's a lot of second chances here, third chances, fourth chances. So does that harbor the problem that we have right now, which is, lack of that mentality, that I gotta get it mentality, when there's so many ways that I could fail and I could still be successful. Like you said, there's people in the 40s and the 50s, Colonel Sanders and the guy that started Nintendo, Gene Roddenberry, who invented Star Trek, one of my favorite series, didn't get started till like they were 40. So this is the land of opportunity. However, sometimes that opportunity can be almost too much to give people that safety that I get to it when I get to it. Oh, I'm young right now. Let me party, and then I get serious later on.
Right. Yep. I honestly kind of do think in that way. I think that, and it might be a controversial take, but back in the 90s and prior to the 90s, when there was kind of that drive to have that masculine, hey, I have to take care of my family, I got kids at home, my wife's not working, right. You almost need that, you need that, in my opinion, right? My opinion only, in order to really push yourself to the limit, right? So what's your opinion, David?
Well, as you all know, I am politically neutral across the board. I will say, on this topic or point, though, I think this is a worldwide issue. It's not even a political issue. This is just a generational change that we're seeing across the world. I don't think it's localized to just the United States. I think in general,
talk about that.
Entitled, they don't want to work. They've been, and I think part of this too is that, to your point, Ian, the generation just before us, that was their take, is we gotta work hard to provide for our families. And that's it. We are going to make this happen. We have to work hard. And then we were all handed this thing. And okay, we got it. Well, that's cool. Thank you. Well, but now I don't have to go work for it, right? Because I should just expect this because my parents gave it to me. Now, and now keep in mind, the majority of the world would not agree with this point, because that's not how as you probably know, Ian, better than most, coming from another country and immigrating here, the idea of, oh yeah, I was handed something and I was given something, that's not a thing that most of the world experiences, even to this day. That's a very situational thing in certain countries only, and only in more recent times I think that has happened. But in general, coming back to the video game video we were watching, of you play this game and then you fail, and because I remember playing these games myself, and I'm like, so cool, and I'm like, okay, crap, I'm like, okay, I failed 15 times, I'm gonna do it again and again and again and again. If you can, I actually beat Super Mario all the way through one time. It took, I don't even know how many hours. I had to make sure the batteries were charged in full before I started playing, so that I wouldn't lose the game by the time the batteries were done. And I spent 12 hours sitting there playing this stupid game, because you can't save.
Right.
If the batteries die, that's it. You're done. There's no save point. I can say in a test to, believe me or not, I did it once. I have no proof. I didn't save my game. I have no way to prove it. But that's the cool thing, is it was so different. Now, to his point of all these games that we have today, every single kid is entitled. You know what's funny is, not everybody knows this, but I have 4 younger brothers. I'm the oldest of 5 boys. And my brother right underneath me is borderline, like kind of has a similar thought to me, but everybody below that, and I'm going to argue even him, that's right when social media started coming into play. So like when I was I graduated high school, and then Facebook came out. So it wasn't really part of my childhood, social media. It wasn't a thing. Like, it's like, oh, that's cool. Like, it's a later thing. Like, that's cool. But then every kid from my age down got stuck in it. And it's funny because I graduated early from high school. I started focusing on my business with my construction industry with my dad. Then I got recruited into financial advising after getting married at age 18 and building this. Like, I had my life planned out. I was going, like, I'm going and I'm going to succeed. And every one of my brothers failed and failed and failed and failed. And they still are failing to this day. In fact, one of my brothers still lives at home in my mom's basement, married, has never left home. He's still living married in my mom's basement, never left home. And if he's watching, I apologize, Sam. I'm not trying to throw you under the bus. But just saying. It's just a different mindset. And it's weird how this works. So for people like us that are thinking differently, I want to encourage anybody watching this. If you're in that mind space of you're younger and you're like, I don't know, it's hard, it's tough. Yes, it's hard. It is hard. It's probably, I'm going to argue, harder than it was for us because of the social media and the distractions and the friends that are not going to support you with this because they don't have the same mindset either. But align yourself with good quality people, follow good content, make sure you're filling your mind with good stuff and keep working on this. And eventually you'll get to a point of buying a home, building a business, having the right things in life, the right friends, the right opportunities. You can start building and seeing this happen. And that's why even to this day, some of the people that are the wealthiest in the world are extremely young, younger than us by 10, 20 years. Like, I mean, they're literally creating wealth from social media influence and things like this. That is exactly what all of our friends are this younger generation is on. Like, they're taking advantage of the system and they're figuring out how to gamify this thing into making it work, not just pulling in the data and this perpetual never-ending cycle, but they're like, what's the end game? How do I win the game? What do I do to change this thing? Like Sonic and Nintendo, Super Mario Brothers, and all these things. Like, keep pushing, keep grinding, keep going. But that's easier said than done. Work ethic is half the battle, and work ethic is not something you can teach. You just gotta want it or you don't.
I got one more pushback, and I know it's getting late because we're at an hour and 47. Because this is a topic that needs to be discussed that we're not discussing a lot. And it needs to be discussed. I think a lot of the problem that we had, it is first world problems, and Ian will probably testify that you're seeing the contrast from where you come from in East Africa as opposed to here. A lot of these things we built it up so much where you have the luxury to do some of the things that you have done, where you could. I don't have to leave mama's house. I don't have to do these things and still survive. So a lot of these things are first world problems that it took the back of some these pioneers in order to have it built up in order for you to have the luxury to do such things. Some places you don't have the luxury of being lazy. You're going to starve. You're going to die. And nobody's going to care. So it's different. Now we have the luxury. So I think the balance is where it's at. I think we got to the pinnacle in the 90s, and then it started dipping off. We got to where, hey, everything was working. We still had a little bit of our beliefs, our our grit and everything like that. I think we tried to be too woke and try, and it's not political. It's just we try to be too inclusive. Some people, there's winners and there's losers, and the world's always been like that. And we got to call it for what it is. Some are just going to lose. You can't make the loser a winner. If that's the case, what is winning at that point?
Right. Yep. Yep.
You know, if everybody won, what is winning? You know, so
Right.
it can't happen like that. I mean, and this is what made this country great. This is what we've been doing, and that's what made civilizations great. You know, it takes those winners to build society, and that's what we talk about on the Power of Ownership podcast. You got to decide who are you? Are you the one with the grit that's going to be the maker and the shaker, or are you going to try to eventually have these things by luck or by meiosis or how's these things going to happen for you? Now I will give you this, David, and I will give the younger generation this. You do have more opportunities to make money. They did, however, I think the bar has been set low. They made the bar with this technology. I could make $1 million off my phone. Never was possible 20 years ago, 25 years ago. I could sit at home and never leave the house and make a whole bunch of money. That wasn't possible before. I could sit there and talk to you with video cameras and stuff like that. That wasn't possible before. So, yes, technology is great. However, there are ways that people are making money on technology. However, it's the beginning. We're about to see in the next couple of years when AI take over, all of these jobs that you got lucky and made some money on, or first of all, were you able to keep it? And are you able to adapt when all these bots are doing your job that you think you innovated and we don't need you no more? So are you on that? Are you going to be on that cutting edge? Where you're able to survive. And shameless plug, that's one of the chapters in my book. It's coming out the end of the month, coming out next 2-3 weeks. It's called Message to the Businessman. So I talk about these things.
Absolutely.
So any last thoughts on it before we wrap this up?
Yeah, just agree with you wholeheartedly on the point of it doesn't matter if you're young or old. You have to take ownership of your life, your focus, your goals, what you want to do. It doesn't matter where you're at. You can always start anew. You can always grow and change something, do something different. You're not stuck in whatever you were raised to believe, raised to think, raised to, focus on. Everybody can make their own choice. And we do have the choice. I mean, that's one thing that is nice about living in this country. You do have the choice. You can do whatever you want to do.
Right.
You can choose to live on mom's couch, or you can go build a business. It's your call. You can buy a house or you can rent.
Right. And nobody will. Well, they somewhat. You get somewhat socially ridiculed, but not much anymore.
Yep.
That's one thing they need to bring back. Bring back that peer pressure. Everything is scheming nowadays.
I miss those days where you could call somebody something to their face or jokingly poke fun at them and be like, whatever. I'm not going to use any specific examples, but do that. And it was we're best friends now because we're doing this back and forth.
Right.
I was just talking with my friends the other day, something as simple as Ace Ventura, as an example, a movie that you kids watch. Ace Ventura came out back in the day. If you haven't watched it, that movie probably, if it came out today, wouldn't do great and wouldn't fly.
Mm-hmm.
Back in our day, it was that was hilarious. It was hilarious. Now it's nope, it's offensive. I am offended. And we're going to have a whole, nobody's going to watch this thing and it's going to be boycotted and thumbs down and all the rating systems. It's just the whole dynamic has shifted. So
that quick.
It's changed.
But they're trying to shut Scary Movie 6 from coming out. They're trying to stop that.
I saw that it was coming out. Yeah. But the point is, with the coming back to the video game thing that we watched a second ago, keep trying. Don't give up. Keep trying in what you're doing. Don't just give up. I fell off the cliff in Sonic. Okay, well, I guess I just quit the game now. No, keep going. That's grit. That's the power of ownership. No, I got this. I can learn. I can do better. I can jump over the thing and kill that stupid enemy right there and keep going. Keep doing that stuff. And I think a lot of people just give up too quick.
Yeah, that's like that game, My Hero, and I never got past the first board of My Hero, man. That was a Sega game. That was back in the days, man. A Sega 16-bit. That was before the 30. That was before the Genesis, man. I had My
Nice.
hero was impossible to beat, man. You know, so with that being said, man, don't forget, shameless plug, my book, Message to the Businessman, coming out soon. Be on the lookout for that. You know, if y'all came all the way to the end, I appreciate y'all. And it looks like the viewership is dying down, so it's about that time. So with that being said, we're gonna see y'all next week. Peace.
Thank you, everybody.
Thank you.
Yeah.